Hello, everybody, and welcome to IC Markets Market Commentary. My name is Tamar Mehr from Trade with Precision. So, last week we've learned about the Trump administration tariff, and the market has reacted quite sharply. We saw big moves in equity market, in forex market, and in commodity market as well. And I want to start here with a chart of gold because we have seen gold pulling back from its all-time highs. So this is the weekly chart, and as we can see here on the weekly, we are in a very nice uptrend. We've got the moving averages 10, 20, 50, all in the correct order for an uptrend, and good convergence here on the momentum indicators. Now, the level that I'm looking for a pullback is the first level of the 29.50, and we can see we also had a couple of touches at that level in the past. And if and when the market will pull back in that area, we'll be close into the buy zone, that area between the 10 and the 20 moving averages. Now, I also added the Fibonacci retracement from the low to the high, and we can see that we have the level of the 38% retracement clustering quite nicely with the 29.50. So the 38% retracement is a bit more of a shallow pullback. If we'll get a bigger pullback into the 61.8% retracement, the level that I'll be looking at is in and around the 27.90 area. It's the previous swing high before we had a proper push back into the averages. So this level is clustering quite nicely with the 61.8% retracement and currently still within the realm of the buy zone. Now, if we go into the daily chart, what I'd like to do is add some more Fibonacci retracement, but this is more from the daily perspective. So if I look at this Fibonacci retracement of this move, we can also see that what we've got is that level of 29.50 is actually on the daily chart, the 61.8% retracement as well. So I do like this level for a potential reaction by the buyers. However, if this strong sell-off will continue, then I'll be looking at the 27.90. So two levels here that I'm watching on gold. Next, I want to look at crude oil. And this is the weekly chart, and we can see the weekly is now back into a downtrend with the moving averages crossing into the correct order, 10 below the 20, below the 50. We also have the momentum indicators converging here to the downside on the latest move. Now, what I like about this push to the downside is that we also ping below a nice level that if we'll zoom out a bit, we'll have a look at these touches over here. It was at the time that the market was in an uptrend. So I like the fact that we ping through this area, and the level that I'm looking for a pullback is around the $65 mark, and that is this purple line. So we can see the importance of this level at this market in the past. So if we'll zoom in a bit, what I'm looking for basically is a pullback to test this level from below, signs that the sellers are returning into the market, and a continuation of this move. So if we'll take a look here on the daily, we can see the touches at that area. We try to go higher. We previously broke the downtrend here on the daily, couldn't hold, and pushed through it. We are quite overextended from the moving averages, so I'm looking for that pullback and signs that the sellers are coming back around this area. I want to take a look at the chart of Germany 40 or the DAX, and what we can see with the very strong sell-offs that we had in the last couple of days, and an area that I'm looking for potential bounce of this market is in and around the 20,000. It's also a round number, and it has been an area of support and resistance in the past. Now, what's interesting about the German index is that if we'll take a look on the monthly chart, we're simply pulling back into the averages. So this is a very strong push and fast toward the averages, but the monthly chart is still in an uptrend, and we're simply touching the buy zone. So we still have the momentum indicator all converging to the the upside and the moving average is 10, 20, 50, all fanning, all in the correct order for an uptrend. So I'm looking for a potential bounce of the 20,000 area. However, if we'll take a look at an American index, so let's take a look at the Nasdaq has entered a bear market, and this is the monthly chart. And we can also see that we pushed below the buy zone. So now we have a deeper pullback in the context of the monthly, and we also broke the uptrend because we traded below this previous higher low. And we can also see here the push downward by the momentum indicators. So very different to the German index. Lastly, I want to take a quick look at the Aussie dollar. So the Aussie dollar has sold off quite strongly against the US dollar, one of the hardest hits currency against the US. And I want to take a look at the level that we bounced off. So this is actually the level of the pandemic that we reached to, and we just came close to that area and bounced above it. So I marked that area with a red line. And if we'll take a look here on the daily chart, we can see that we bounced just above that area. So we haven't pinged that low, but this is a very strong sell-off, and for a potential bounce higher, a bit of reaction to that level, I'll be drilling down into lower time frame. Currently, this is just a pullback into the sell zone. I'd like to see a push and then a higher low to confirm that more buyers are coming back into the market. So with these big moves that we're seeing in the market lately, really important to always make sure we're also looking after our risk. Happy trading, everyone. Bye for now.